Level 1. The first loss that didn't kill you. The number is $4,200. Not a lot. Not nothing. It's gone in 11 minutes on a Tuesday morning, and you're sitting in your apartment in a desk chair that cost more than the trade, staring at a red number that used to be green. And the strange thing, the thing nobody warns you about, is that you don't feel destroyed. You feel interested. That's the first rule of this level. The market will hurt you, and your brain will misread the pain as information. You'll call it a lesson, you'll open a notebook, you'll write down what went wrong with the confidence of someone who has never been wrong the same way twice, not yet understanding that you will be wrong the same way many times for years. You're working with $18,000, saved, real money. You tell yourself you can afford to lose $5,000 of it before you need to stop and reassess. This is the kind of logic that sounds like discipline and functions like permission. You spend 3 months watching charts before the market opens. You read books with titles that promise edge. You find forums where men with usernames post their P&L like war medals, and you study them the way you once studied for exams, believing that if you understand the material, you'll pass. You make $100 in a single afternoon, and you don't sleep that night, not from stress. From the feeling that you have finally found the thing you are supposed to be doing. That feeling is not wisdom. It's the hook. Level 2. The education that costs you money. By month 5, you've lost $9,400 and made back $6,200. And you've started to understand that those two numbers don't cancel each other out psychologically the way they do mathematically. The losses live in a different part of you. You start to develop what you'll later recognize as a system, a set of rules you follow, not because you fully believe in them, but because having rules makes you feel less like you're gambling. Entry criteria: stop losses, position sizing. A spreadsheet that you update every evening with the kind of devotion you've never applied to anything before. The market doesn't care about your spreadsheet. But here's what this level teaches you, slowly, expensively. The market doesn't care about anything, and that neutrality is the most clarifying thing you've ever encountered. No politics, no favoritism, no personality. You're wrong, you lose money. You're right, you make money. The simplicity is brutal, and you find it more honest than most human relationships. You blow past your $5, 0 loss limit without stopping to reassess. You tell yourself the rules you made were for a version of you that didn't know what you know now. This is true. It's also exactly what everyone tells themselves at this stage. You put in another $8,000. You don't tell anyone. Level 3. The first time it actually works. You're up $31,000 on the year. Not life-changing. Life-suggesting. Something shifted 3 months ago, and you're not entirely sure what it was. You stopped fighting the tape. You started reading price action the way you read a room. Not by analyzing it, but by feeling it. And then checking the feeling against the data and learning to trust the intersection. Your win rate is 44%. Your average winner is 2.3x your average loser. You understand now in your body what it means when people say it's not about being right. It's about what you do when you're wrong. You've started waking up at 5:47 a.m. without an alarm. You've also stopped making plans on weekday evenings, stopped watching anything that requires sustained narrative attention, stopped being fully present at dinners because some part of your mind is always running a background process. Reviewing the day's trades, rehearsing tomorrow's setups, asking what the market is telling you that you haven't heard yet. Your girlfriend notices before you do. You tell her it's temporary, that once you get to a certain level of consistency, you'll be able to decompress. You believe this. It belongs to the same category of belief as the $5,000 loss limit. A rule designed to make you feel like you're in control of something that is quietly controlling you. The $31,000 feels real. The cost doesn't yet. Level 4. Scale. You're managing $340,000 now, not all yours. Some of it are friends, some of it family. This is the level where the psychological architecture changes completely, and most people don't realize it happened until they're already living in the new structure. When it was your money, a loss was personal. It hurt in a specific ego-adjacent way that you'd learned to metabolize. Now, a loss is relational. It sits differently in your chest. It makes you alter positions, not based on the setup, but based on who's watching. And that corruption is invisible from the inside. You think you're trading the same way. You're not. You make $78,000 in a 4-month stretch and send a performance summary to the people whose money you're managing, and the praise you receive is warm and specific, and it does something to you. It creates a new dependency. You need the next summary to be as good. You need the pattern to hold. The market doesn't know about your relationship dependencies. You start taking slightly larger positions. Not recklessly, thoughtfully, with justification. The justification is always available if you look for it. This is a skill you didn't know you were developing. The ability to construct a coherent narrative around any decision you've already emotionally made. You give back $41,000 in 6 weeks. You don't tell anyone the real number. You tell them you're in a drawdown, which is true, and that you're managing risk, which is technically also true, and that you expect recovery, which is a story. By the time you're back to flat, you've learned something that will define the next several years of your life. You are capable of lying to people who trust you, not out of malice, but out of the specific desperation of someone who cannot afford to be seen failing. Level 5, the quit. You quit on a Thursday in March. Not dramatically. You close your positions, you transfer the managed accounts back to their owners with a letter that is careful and professional and contains no true sentences, and you close your trading platform and sit in the silence of your apartment for a long time. The number you lost in total across 3 years, including the managed money, is $187,000. Your own losses net, $54,000. The rest you made back. The rest is almost a story of success if you tell it correctly, and you've learned to tell it correctly. You tell people you needed a break. You tell people the market wasn't offering the setups you trade. You tell people you're exploring other opportunities. None of these are why you quit. You quit because you looked at yourself in a bathroom mirror one morning before the open and didn't recognize the person looking back, not in a dramatic way, not in a movie way, but in the quiet way of someone who has been making small compressions for so long that the shape of the original thing is no longer retrievable. You take a job, reasonable salary, finite hours. You are around people who talk about things other than markets. You go to sleep without running P&L in your head. You eat dinner slowly. For 4 months, you feel something you can only describe later as clean. Level 6, the pull. It starts as watching. You tell yourself it's just curiosity. You pull up the charts the way you might check in on an X, not because you intend anything, just to see, just to know. And the patterns are still there, obvious to you now in a way they weren't for the first 2 years. The price action, legible the way a language is legible once you've learned it. And you feel the recognition move through you before you can stop it. You make one trade, small, a few $100s. Just to stay sharp, you tell yourself. Just to not lose the skill. It works. Of course it works. The market is not punishing you for coming back. The market doesn't remember you. This is either the most freeing or the most dangerous thing about it, and at this moment, you choose to experience it as freeing. Within 6 weeks, you're trading before work. Within 3 months, you've quit the job. You tell people it wasn't the right fit. You tell yourself you're more disciplined now. You have a new system. You've done the psychological work. You are not the same person who quit in March. This is partially true. You are a more skilled version of the person who quit in March. You are not a different one. Level 7. The return has no bottom. You're up $140,000 in 11 months. Real money now. The kind that changes decisions. You move. Better apartment. You start thinking about this as a business. Registered entity. Separate accounts. Quarterly reviews with yourself. The infrastructure of legitimacy. It feels like you've graduated into a version of this that is sustainable, professional, earned. People come to you now. Not family this time. People who've heard. People who ask careful questions and then ask if you're taking on capital. You are more careful this time. You structure it differently. You charge fees. You have documents. You are, by most definitions, successful. You are also. And this will take you another year to understand. Operating at a level of sustained cortisol exposure that is quietly remodeling your nervous system. You don't notice it the way you would notice a physical injury. You notice it the way you notice a slow leak. By what's missing. the ability to be bored without anxiety, the ability to sit in a room where nothing is at stake, the ability to feel something other than the muted, calibrated alertness that the work requires. Your wins don't feel like wins anymore. They feel like not losses. You tell a close friend this over drinks, and he says it sounds like you need a vacation. And you nod, because there's no way to explain that the problem isn't tiredness. The problem is that you have spent so long inside a system that rewards emotional detachment that you have become genuinely uncertain whether you're detached strategically or just detached. Level 8, the architecture of control. You manage $2.1 million. You have 3 people who work with you now. Not employees exactly, contractors. Analysts who send you morning notes and flag setups and manage the data infrastructure. You are no longer a trader who is also a businessman. You are a business that contains trading. The markets still move. You still read them. But something is different now. You've introduced enough distance, enough structure, enough other people's work between you and the decision that the raw feeling of it, the thing that got you addicted in the first place, is filtered out. You're cleaner, more consistent. You've solved the emotional volatility problem by removing the emotion. You don't examine what else you removed with it. The people whose money you manage trust you in a way that is heavier than admiration. They've structured their financial lives around your performance. You feel this weight not as pressure but as obligation, and you've learned that obligation is quieter than pressure, and therefore harder to notice until it's the only thing you feel. You haven't taken a day fully off in 8 months. Not because you can't. Because the idea of a day with no market access produces a low-grade dread that you classify as professional responsibility and do not look at directly. This is the level where the system has fully inverted. You did not build something to serve you. You built something that you now serve. Level 9, what you know. You're at your desk at 6:04 a.m., and the markets won't open for hours, and you're reading the overnight session and drinking coffee that's gone cold. And outside the window, the city is just starting, and somewhere down there, there's someone who opened a brokerage account last week. They probably lost money yesterday. They probably have a notebook. They are almost certainly writing down what went wrong with the confidence of someone who has never been wrong the same way twice. They think the losses are lessons. They think the wins are proof. They think that if they understand the material well enough, they'll pass. They will not pass. Not yet. Not the way they think they mean. You feel nothing dramatic about this. Not superiority, not pity. Something closer to the flat recognition of a pattern you've seen enough times to. Stop finding interesting, the way a doctor stops finding illness surprising. We're that person. The notebook, the sleepless night after the win, the rule you wrote and broke, the money you didn't tell anyone about. The market didn't change. You changed, slowly, in the direction the market required, and now you sit here in the early morning with $2, 1 million under management, and a cold cup of coffee. And the absolute inability to remember the last time you wanted something that had nothing to do with any of this. That's what the top costs. Not money, not relationships, though those too. Want. The clean, directionless want of someone who hasn't yet organized their whole self around a single purpose. You don't get that back. You trade the open. Somewhere below, someone just funded their account. They think they've found the thing they're supposed to be doing. They're not wrong. They're just early. And early in this market is another word for before the cost.